Hey everyone! Welcome back to my channel. Today, we're diving into the exciting world of stocks and exploring 7 companies that could potentially double your money by 2025. Remember, investing comes with risks, so always do your own research. Before we jump into the list, let's talk about what makes a stock a good candidate for doubling in value. Look for companies with strong fundamentals, innovative products, and a solid growth strategy. Also, consider market trends and economic factors that could influence their performance. The second year of Wall Street's bull rally did not disappoint. By the close of trading on December 31, the Dow Jones Industrial Average, the benchmark S&P 500 Index, and the growth-oriented Nasdaq Composite Stock Index were up 13%, 23%, and 29% respectively, with all 3 indices repeatedly rising to record highs at the close of trading in 2024. However, putting your money to work on Wall Street means looking ahead to the future. Whether the bull market lasts a third year or a severe downturn begins again in 2025, securities to invest in can still be found. The Motley Fool has selected 7 stocks that the piece believes have the potential to double the money invested in 2025. No. 1. NIO. The first company with impressive growth that faces challenges, but has the catalysts to overcome them and deliver triple-digit gains in the new year, is Chinese electric car maker NIO, NYSE, NIO. Although China's economy has taken a bit of a hit in the 2 years since the COVID-19 mitigation restrictions were lifted, NIO has benefited from the elimination of supply chain issues. In the first 11 months of 2024, NIO produced nearly 191,000 electric vehicles, up 34% from the same period in 2023. In the second half of the year, production volume was consistently around 20,000 units per month. The increase in production volume is leading to increased revenue and brand awareness, and should help reduce losses in the coming years. Perhaps the most important events for NIO in the new year were the international debut and expanded brand presence of Onvo and the domestic debut of Firefly. While NIO is primarily targeting middle to high-income electric car buyers, the Onvo and Firefly brands are targeting more frugal consumers. Onvo's electric cars are mid-priced, and deliveries in Europe will begin in early 2025. The Firefly, on the other hand, is a compact electric car that was unveiled last month. Onvo and Firefly working together could potentially double NIO's monthly production of electric cars. Domestically in China, the company has more than 2,800 battery replacement stations and 4,175 charging stations. The ability to replace or upgrade batteries in 5 minutes or less is a potential infrastructure development. Note 2. Pubmatic. The second stock that has promise if all goes well with the U.S. economy is the Pubmatic, Nasdaq, PUBM advertising campaign. Advertising spending is highly cyclical, meaning that concerns about an economic downturn can sometimes be enough to dampen sales and profits for the advertising business. That said, the U.S. economy spends a disproportionate amount of time expanding versus contracting, leading to sustained growth in ad spending over time. What makes Pubmatic special is that its entire focus is on digital advertising, which is growing much faster than traditional forms of marketing, e.g. billboards, print, and traditional TV. The company's cloud-based programmatic advertising platform helps publishing companies market their digital display space, with a focus on video, mobile, and connected TV advertising. Combined ad spending in all 3 categories could grow by double-digit percentages in 2025. Another benefit of Pubmatic was management's decision to build its own cloud-based platform. While it would have been much easier to rely on a third party, the path chosen will allow it to retain a larger portion of revenue as it scales. The cherry on the cake is that Pubmatic's cash represents 20% of its market capitalization, and its forward price to earnings (PE) ratio of 17 is cheap compared to forecasts of sustained double-digit earnings per share (EPS) growth. No. 3. Cloudflare. Another stock in the picks is artificial intelligence-based cloud service provider Cloudflare, NYSE, net. Valued at nearly 18 times projected sales for 2025, Cloudflare is exceptionally expensive. But if the AI euphoria continues, Cloudflare's sales could exceed expectations this year. The first thing to note about Cloudflare is that some of the services it provides have become a basic necessity. In particular, the company's Cloudflare One platform blocks cyber threats and protects access to critical information. As companies continue to move to the cloud, their reliance on third-party providers like Cloudflare has increased. Second, Cloudflare has done a great job of attracting a larger customer base. Nearly two-thirds of sales are to large customers who generate more than $100,000 in annual recurring revenue for the company. Between September 30, 2022 and September 30, 2024, the number of large customers grew 71% to 3,265. However, the deciding factor for Cloudflare in 2025 will be its role in supporting AI and edge computing. Cloudflare Workers AI platform allows companies to run machine learning models on the Cloudflare network. Cloudflare has the potential to play a critical role in developing large language models for many of America's most influential companies, and this could lead to annual sales growth well above the current consensus of 26% in 2025. No. 4. Aspen Aerogels. A fourth stock that is well positioned for triple-digit returns in the new year is electrification and sustainability solutions provider Aspen Aerogels, NYSE, ASPN. Admittedly, clean energy and sustainability are not priority investments right now, with President-elect Donald Trump set to take office in less than 2 weeks. However, the electric vehicle revolution, while challenging, is a path to sustained double-digit sales and earnings growth for Aspen. Aspen Aerogels is known for its PyroThin products, which use carbon aerogel to improve the performance of lithium-ion batteries used in electric vehicles. Aspen's technology should enable automakers to produce electric vehicles with improved range, a sought-after opportunity given that the U.S. continues to lack electric vehicle charging infrastructure. Aspen's thermal barrier segment generated $90.6 million of the $117.3 million in total sales recorded for the quarter ended September. More importantly, the $90.6 million is 176% more than what this division generated in the third quarter of 2023. Between February 2024 and November 2024, the company's full-year revenue outlook, across all segments, increased from over $350 million to $450 million. Prudent cost-cutting combined with margin improvement could significantly reposition the stock in 2025. No. 5. SSR Mining. The fifth stock in the selection is precious metals miner SSR Mining, NASDAQ SSRM. While its stock tends to fluctuate with the spot price of silver, SSR derives most of its revenue from gold mining. While precious metals have soared in 2024, SSR mining shares have plummeted. In mid-February, shares fell more than 50% after a site collapsed at the Kopler gold mine in Turkey, killing 9 workers. The company has since estimated recovery costs at $250 million to $300 million and a timeline of 24 to 36 months. While this is terrible news, there appears to be light at the end of the tunnel for SSR Mining and its shareholders. To begin with, SSR is unique in the sense that its management team has avoided deep debt. While most gold miners are still climbing out of debt holes, SSR has maintained a net cash position. In other words, it has the capital to cover rehabilitation work at Kopler, as well as to advance projects at other mines. There is also a possibility that its environmental permit, which was revoked days after the incident, will be reinstated. Notably, Turkey has not revoked its mining licenses, which expire in 2026. This suggests that SSR simply needs to provide the Turkish Ministry of Energy with a concrete plan to deal with future mining waste in order to regain its environmental permit. While there is no specific timeline for when this will happen, it is possible within the next 24 months. Finally, last month, SSR Mining announced the purchase of the Cripple Creek and Victor gold mine from Newmont. Cripple Creek and Victor can deliver over 150,000 ounces of annual gold production and immediately increase cash flow and EPS. This should help replace nearly half of the annual production temporarily lost at Koppler. No. 6. Trulieve Cannabis. Trulieve Cannabis, OTC, TCNNF, is a producer of medical marijuana, the use of which for medical purposes is legal in some U.S. states. Its stock has had a rough time since President Joe Biden took office in January 2021, but the new year may prove to be a better year. On the bright side, last year the U.S. Drug Enforcement Administration proposed moving cannabis under the Controlled Substances Act from Schedule 1 to Schedule 3. Assuming the process concludes with hearings and the change happens this year, as expected, it will favor profits. U.S. Tax Code 280E does not allow companies that sell Schedule Y or II substances to take ordinary business deductions except for the cost of goods sold. However, companies selling Schedule 3 substances can make ordinary business deductions on their taxes. The ability to make these deductions should significantly improve Trulieve's operating results. As a high-margin medical marijuana market leader in Florida, the company should prove to be very profitable. No. 7. Applied Digital. The last stock in the selection is Digital Infrastructure Solutions Company, Applied Digital, NASDAQ APLD. The biggest risk and reward for Applied Digital is the development of artificial intelligence. Since the mid-1990s, every next major innovation, technology, or trend has gone through an early bubble burst stage. Based on what history tells us, it is unlikely that artificial intelligence is an exception to the rule. If the AI bubble were to burst, unproven companies like Applied Digital would likely take over. However, if the unwavering optimism about AI continues through 2025, infrastructure providers should be among the winners. Applied Digital CEO Wes Cummins noted in October that his company is in the process of finalizing a lease for a 369,000 square foot, 100 megawatt facility dedicated to high-performance computing (HPC) applications, including AI. Serving as a data center host as well as providing HPC applications for enterprises is expected to drive revenue growth of more than 50% in 2024 as well as 2025. In addition, Nvidia acquired 7,716,050 shares of Applied Digital stock during the quarter ended September. This $63.7 million position, as of the end of the third quarter, made it Nvidia's second largest investment after ARM Holdings. Nvidia would like to see Applied Digital succeed. Applied's custom-built HPC data centers are spurring demand for Nvidia's market-leading graphics processing units, GPUs. In addition, Applied Digital's own cloud-based AI operations run on Nvidia GPUs. Today we've researched the stocks of 7 companies that could potentially double your money in 2025. But I want to remind you again that investing is always associated with increased risk, so always approach investing wisely and be sure to do your own market research.